Welcome to today's CPA Australia's live webinar. Now to start us off, I'm just going to welcome our first presenter into the conversation. Just welcoming Claire Grayston. Now Claire, I'm just opening up your mic. Good afternoon.
Oh, good afternoon, Linda and participants.
I've just handed control over to you as well. Enjoy the webinar, everyone.
Good afternoon, everyone. This is Ram Subramanian here as well. Welcome to everyone, and I will obviously Claire's been introduced and so have I. I'll now pass on to Claire to start her section of the presentation, which will be to do with Audit and Assurance. Claire is our policy advisor who looks after Audit and Assurance, and I am responsible for reporting here at CPA Australia. And Claire will probably run her session for about 20-odd minutes, followed by my session, which will be for another 20-odd minutes, which should give us around 10 minutes at the very end for addressing the questions that participants are posing throughout the presentation. So I'm going to, without much further ado, pass over to Claire.
Thanks so much, Ram. So I thought we'd kick off with just a couple of polling questions to get an idea from our participants which communications you're currently receiving. So have a look on the screen. There's a polling question there for you to answer. You can click all of these, except please, if you're doing F, none of the above, don't click any others because it won't make sense to us. But so if we can start the polling, we've started the polling, so can you please click on all of the updates that you received, CPA updates, CPA tax news in the black, publication, I mean hard copy, in the black digital or in practice digital. If you go ahead please and let us know which of those you are receiving currently, and press the submit button on the bottom right hand corner of your chat screen. Now we've got just a few more seconds to go, so please go ahead and answer those communications that you're receiving, and we'll just see what everyone is receiving at the moment. This just helps us understand, there we go. So this is helping us understand what you're actually receiving. Now if you've never heard of some of those publications, I would urge you to find out about those and send in to CPA Australia. Check, in fact, what you'd need to do is check your your personal profile on our member area. So CPA update, 88% of you are receiving CPA update. 82% are getting the in the black hard publication. Not that many of you getting tax news, but that's fine. We realise, obviously, if you're not involved in the tax area, you may not be interested in that one, but good to be aware that that's available if you want to receive it. And in the black digital, which is reflects some of the material in the black, but comes out more frequently. And then we've got in practice digital, which is available to public practitioners. Nevertheless, let us know if you'd like to receive that publication, which is focused on matters relating to practicing, operating in public practice. Luckily, none of you have said none of the above, so I'm very relieved about that. But I just wanted to go on now to look at which of those you actually read. So which are interesting to you? Because and please, if you could answer this polling question as well. And I've added in another one there, F, I search the website instead. So if you're not really relying on those publications, but you're just doing your own searches, then that's fine. We're just interested to know that. So this will give us an idea of, I guess, what you're finding most useful. Now, please go ahead and answer that polling question. We do communicate all of our policy matters through CPA update, and then we try to go into more detail in the black articles and in practice articles. We do post all of our podcasts through CPA update. We flag all our consultations and then subsequently our submissions. So look, it's a really important way that we communicate with members. So that's why we're asking you these questions, to get a feel for what access you're having already to those policy updates. So just about to close now, so hopefully you've all given us your answers. looking at the results, so a lot of you are reading CPA updates, so that's really great. And as I said, we are trying to put everything that comes up in the policy area, we are flagging that at least with a link. So that will be a go-to to make sure you're receiving everything relevant to yourself in relation to policy. In the black, 60% of you are reading that, which is great. And obviously quite a lot of you don't receive in practice, so that's why the number I see is down around the 10%. But nevertheless, I think that's a fairly high percentage of those that are receiving that. Looks like they're reading that. So you search the website, 31% of you. So look, that's really helpful information to us, and we'll go on now and actually get stuck into the policy updates that we're here to share with you now. So I'm going to talk, as Ram explained, on audit and assurance matters. So I just wanted to run through initially the latest standards and guidance that has been issued and is under consultation, and also upcoming projects, really focusing on Australian standards and guidance on this slide. So we've had ASIP 540 on auditing accounting estimates issued this year, and the reason for that standard to be updated was that the business environment and the accounting standards are getting more and more complex, and dealing with that complexity creates challenges, and this standard is trying to assist auditors in addressing those challenges and obtaining sufficient audit evidence around those more complex areas which involve estimates. So the standard setters wanted to use this as a way of improving audit quality and increasing professional scepticism in areas of estimates where there's a much higher risk of error or misstatement. There's a range of changes. This standard now requires separate assessment of inherent risk and control risk. It asks you to look at the spectrum of inherent risk to drive the scalability of your procedures. In looking at inherent risk, it talks about assessing estimation uncertainty, complexity, subjectivity, and the controls assessment. It talks about external information sources and asks for further risk assessment procedures which really focus a lot on opportunity for management bias. The standard asks you to stand back and really, after doing your procedures, look at whether you have obtained and addressed those risks and obtained sufficient appropriate audit evidence. So it highlights that the objectives of in testing estimates is to ensure your work effort covers the methods, assumptions and data in assessing the appropriateness of the estimates. It does require greater documentation and focuses on disclosure, which now asks for the auditor to assess whether those disclosures are reasonable rather than simply adequate. So we have recently done a webinar on that standard, and if you want to delve into more detail, I'd recommend there's a link there on the slides which you should be able to use from your downloaded version, and go and listen to that webinar, and it's got a whole lot of slides where the IASB talk through examples of how to apply ASIP 540. The auditor rotation requirements have changed this year for public interest entities, and I flag that because for those of you that are auditing public interest entities, you will have needed to be in very careful planning around ensuring that your rotation meets the new requirements. Essentially, there's a period now until 31st of December 2023 when there is a 3-year cooling off period for engagement partners and engagement quality control reviewers That will then become a 5-year cooling off period from the 31st of December 2023. So it takes quite a lot of planning to work through those requirements and make sure that you do have a partner available for when the 5 to 7 year period on finishes, and they need to take a cooling off period. So I'd commend you to look at, if you want more information on that and need any clarification, the APSB, the Ethical Standards Setter, has a very good Q&A which explains exactly how to plan for that rotation. I do note as well that the Restructured Code of Ethics will be operative from 1st of January 2020, so please do look out for future webinars that are coming up to explain what the changes are, because they're quite significant. This code will look quite different from 1 January 2020. Now, in terms of consultations, we've just been through a consultation on the Review Engagement Standard 2410, which is for reviews by the auditor of the entity, so the interim reviews done on the 6-monthly accounts. Now, that is being considered by the AUASB tomorrow, and they are concerned, and practitioners are concerned about whether the change that they have put in place in terms of going concern, we're a little concerned it might be overemphasising the going concern procedures in a review, and so the AUASB are considering how they might balance those procedures better in the review report, and we've encouraged them also to look at covering off the other review procedures in the report a little bit more thoroughly so that going concern isn't overemphasised. We will also be doing a similar submission for New Zealand, which is also looking at that standard, and they're looking at trying to be consistent with the Australian standard. In relation to AUASB upcoming projects, the AUASB have committed to revising GS 009, which is on SMSF audits. So if you have any concerns about that guidance statement, please do let us know, but we flagged a whole lot of issues for the AUASB to consider in their revision, and we will be working with them on that one. And they've got a whole program of updating further guidance statements, and we'll keep you informed as those progress. Now I'm just moving on to international projects. So it's really important for us to be aware of the international projects that are coming up, because they do get taken up by the AUASB here in Australia and then directly impact the standards that apply to the practitioners, many of whom will be you, the listeners. So the IAASB consultations that we're waiting on at the moment is risk assessment ISO 315, which is very voluminous and made significant proposed changes. We did make a submission on that, and we're waiting for the final standard, although they have a redraft out, which the AUASB is fairly supportive of. So we're expecting that will probably be approved this month and will be effective for periods commencing 15 December 2021. The Agreed Upon Procedures project internationally, we're expecting that to be approved as a standard in December this year, and that will change the way that Agreed Upon Procedures are done actually quite a bit. And it will be interesting to see how the AUASB decides whether they decide to adopt that exactly as is here in Australia, because it will no longer require independence, for example, and so there will be a number of changes that from the existing AUASB standard. We've done a lot of outreach on quality management standards, which are intended to replace quality control. So currently ASQC1 and ASA 220 will be replaced by quality management standards. So we do have a very good podcast on that. So if you're interested in hearing about what those changes are planned to be and how that will impact you, and practitioners, please do listen to that podcast, and we'll keep you updated on what the final standard is in due course. The project on extended external reporting has come up with guidance which has covering half of the challenges which that type of report, assurance on external reporting faces, and they are now working on the remaining 5 challenges. So we look forward to getting that draft guidance later in the year. One very important consultation, the monitoring group, so firstly, is an ongoing consultation, if you like. They've reached out extensively internationally in terms of the future of audit-related standard setting, which the monitoring group is recommending to be taken from IFAC to a more independent body, but we're still unclear about the progress of those intentions, and we'll keep you updated when further developments arise. But what I wanted to move on to was the open consultation with the IASB on less complex entities, and I would really encourage you to give us your feedback on this one, because it's really important in that the IASB are asking for what's really what's not working with the auditing standards currently. So they want to know whether the challenges that audits of less complex entities are facing could be addressed either by developing a new auditing standard for less complex entities, developing guidance, or whether all of the existing auditing standards should be amended. So if you have any thoughts or opinions on that, we would very much like to hear from you. I wanted to talk about the regulators and the relationship we have with them, and some of the matters that they are addressing at the moment that will impact you. So, first of all, ASIC are currently responding to the Parliamentary Joint Committee report, which recommended that they devise a measure of audit quality which is comparable over time. And they've been looking at audit quality indicators, and they have advised us that they will be including those audit quality indicators in their inspection report, which is due to be issued in December this year. So that will be very interesting. They will be getting data supplied by the larger 6 firms, international networks, and they will share that data when they issue their inspection reports this year. And those will be measures of audit quality in addition to the audit inspection findings. From the ATO, we are getting a lot of guidance coming through for SMSF auditors. We're always putting that through CPA updates, so I would keep an eye on that, and we're keeping that also on our website under the SMSF auditor page. And they're being quite informative, try to bring auditors up to date with their latest thinking. For example, their latest guidance was on SMSF auditors verifying investment market values. So I'd keep an eye out for those pieces of guidance. The Registered Organisation Commission, which is a regulator for unions and employer organisations, has been working with us, and they released a podcast recently on what unions and employer associations can expect from their auditor. We work closely with state-based regulators, and most recently the Consumer Affairs Victoria, we've been talking to them about the real estate trust accounts here in Victoria, and we're suggesting to them that they need to be looking at much more closely aligning with the auditing and assurance standards. So if you have any concerns regarding state-based legislation that you're dealing with in the audit space, then we'd certainly like to hear from you on that. Now, one of the most challenging, I guess, inquiries that we're now facing in the audit space is the Parliamentary Joint Inquiry into the regulation of auditing. Now, there's 12 terms of reference, which really cover everything imaginable in relation to audit and assurance. But essentially, we think that they can be broken down into 5 main areas. Independence, so conflicts of interest coming from, that might arise from non-assurance services, and certainly we've seen in the press there's been quite a lot of attention paid to the Big Four, the services that they've been providing, and concerns around the extent of consulting services that are provided to audit clients. So this inquiry very much will be looking hard at that and what requirements, whether additional requirements are needed in that area. So the second area is competition, and we're interested in hearing from you on these topics, whether you think there's sufficient competition in the audit market in Australia, whether there's problems with auditors providing too much non-audit services to audit clients, or whether indeed you'd be concerned about them providing them to non-audit clients as well. Do you consider that there's barriers of entry, for example? The third area is audit quality, whether there's sufficient audit quality in Australia, whether the inspection findings that we're seeing from ASIC, which are not fantastic, although they did improve this year, thankfully, whether you see that as being a good measure of audit quality. The inquiry is also looking at the scope and purpose of audit, and we'll certainly be wanting to raise with them issues around whether other aspects of information that is reported by entities should be assured, or whether additional information should be provided by entities to meet user needs. The fourth area is the fifth area is the role and effectiveness of legislation and regulators, and certainly we have a huge amount of duplication in this area in Australia, and we have a lot of requirements in state-based legislation that's conflicting, which can undermine audit quality in different states. And then it encompasses all other matters really relating to audit and assurance. So if you have comments on the inquiry, please do pass those on to us by 20th of September so that we can prepare our response. We've been working on a lot of initiatives in relation to audit quality. I'd recommend that you have a look, if you're in the audit space, at the guides that are pictured there on the slide, which deal with improving audit quality using an individual recognition and accountability framework, and improving audit quality using root cause analysis. We've got some podcasts on data analytics there on the website, and we're working with the large 6 firms on the Future of Audit project, as well as Chartered Accountants ANZ, and we'll certainly be giving you more information on that in the future. And initiatives including these policy updates and trying to keep you abreast through our communication channels. Finally, I just want to cover, before I hand back to Ram, I just wanted to talk about climate change disclosure developments. Now, this does cut across the audit and the reporting space, but there's really quite a shift, I think, in focus, and definitely amongst the regulators that it's really important that all of our members are aware of. So I've flagged there a number of developments. First of all, earlier on in the year, the Accounting Standards Board and the Auditing Standards Board issued a joint bulletin on climate-related and other emerging risks. Now, it didn't ignore other risks besides climate risk, but it was the primary focus of that document. And it really was highlighting that materiality isn't just quantitative, it's qualitative as well, and there's many indicators from investors that they are expecting that risks, including climate risk, is considered in the financial report and also then by the auditor to make sure that disclosures are appropriate. So we really flag that with you. If you're a preparer or an auditor, you really need to be across that bulletin to make sure that you're considering whether climate risk is a material risk. The couple of other recent publications, the ASX Corporate Governance Principles and Recommendations were amended this year, and it's important to highlight recommendation 7.4, which requires a listed entity, or doesn't require, recommends listed entities disclose whether it has any material exposure to environmental or social risks, and explain how it manages or intends to manage those risks. So really important to be aware of that. It talks about integrated reports and sustainability reports that may be able to address that recommendation. APRA has been very vocal in highlighting its expectations around climate risk, and that it considers that the prudential standards require consideration of that risk. Important for entities regulated by APRA to take a good look at the potential for risks in your space. And finally, the ASIC regulatory guide on the operating and financial review, G247, has been amended to include climate change, identifying that as a systemic risk that could have a material impact on the future financial position, performance or prospects of the entity. So to make those charged with governance in the entity aware that they could need to address that in the OFR. So I want to hand on then to Ram for the reporting update.
Thank you, Claire. Thank you very much for that. Any questions that you may have for Claire on the topics that she touched on in the audit and assurance space, please do type them in and we will address them at the end of the webinar. I'll now move on to my segment, which is looking at financial reporting matters, and I'll probably kick off by looking at international issues. In Australia, we use IFRS as the basis for financial reporting, so I'll pick up on what's happening in that space. I'll then look at some Australian-specific developments from the Australian Accounting Standards Board, and then I'll cover off some sector-specific issues, looking at the not-for-profit sector and the public sector. All right, so what's happening with the International Accounting Standards Board and some of the projects that they are working on that may have an impact in the near future. I haven't picked up all the projects that they've got. I've only picked up some of them, and I've also got a couple of things there which are not necessarily work in progress matters, but actually final decisions that have been issued. I'll pick up on those as well in that particular slide. So goodwill and impairment is a major project that the International Accounting Standards Board, the IASB, is currently undertaking. That comes off the back of post-implementation review they did of IFRS 3, business combinations. And it's probably not any surprise that across the world, including in Australia, impairment is seen as a challenging area in the accounting space. So quite often ASIC here, when it reports on its surveillance findings in the financial reporting space, impairment usually comes at the very top as an area where they find shortcomings in the accounting space. So it's a good thing that the IASB is looking at this and looking to address some of the challenges around goodwill and impairment. Now they're looking at 3 issues. So one of the issues is impairments are not timely. So that's one of the feedback issues that have been received by the IASB from the post-implementation review of IFRS 3. The second issue is one of cost. It's expensive to do impairment calculations, etc. So that's the second issue. The third issue is that users need information to assess subsequent performance of business acquisitions, and that needs to be addressed through improved accounting requirements around goodwill and impairment. So those are the 3 issues that they're looking at, and currently their tentative decisions are addressing those 3 issues. Firstly, looking at the timeliness issue, One of the suggestions that was put to the IASB was, should we move back to a model of amortization of goodwill? Currently, we have taken an approach of impairing goodwill rather than amortizing it. One of the suggestions was, should we move to amortizing goodwill over a given period of time? And the tentative decision is not to move to amortization. They're going to stick with impairment of goodwill. And I think at CPA Australia, we probably think that's the right thing to do because amortization is arbitrary. It sort of puts an amortization or a depreciation charge on goodwill, which may or may not be true. So impairment still seems to be the right approach to take. So they are proposing to continue with the impairment model. And the possibility is also to present a subtotal line in the balance sheet reflecting total equity before goodwill. So that's one of the suggestions to cover point one. And the second point on cost, which relates to impairment being expensive or impairment testing being expensive, there is a possibility they're considering permitting relief from mandatory annual quantitative testing. Because currently you've got to do annual testing of goodwill for impairment. They're suggesting that there may be some relief available from having to do that going forward. They're also looking at including some restructuring and enhancement of cash flows in value in use estimates and also allowing post-tax inputs for value in use estimates. So those are two suggestions to address how to simplify the impairment testing process. And finally, addressing user needs for better information. They're proposing to do that through improved disclosures, potentially looking at providing some strategic rationale and key objectives for acquisition decisions being made by a company, and also in relation to post-acquisition performance, are the key objectives being met? So some disclosures around that as well are being proposed. A discussion paper is expected from the IASB on the goodwill and impairment project by the end of this year. So we will signpost that when that happens through CPA update and other communication channels that you already saw earlier in the polling questions. So moving on from goodwill and impairment, I'll move on to the second big project that they're looking at, which is primary financial statements. And this is part of their better communication project, where they're looking to improve the communication value of financial statements. And the primary financial statements project is part of that. One of the issues that they've considered as part of this project is to look at non-GAAP measures that are quite often found in financial statements. Numbers like EBITDA or cash earnings, which are not really IFRS or Australian accounting standards based numbers, but numbers that nevertheless are included in financial statements by companies quite frequently and used by analysts and users as well quite frequently. So the IASB is looking at ways of including commonly used performance metrics into the IFRS literature so that it can be standardized and there is some degree of comparability going forward. So non-GAAP measures is a key area they're looking at. Another area they're looking at is to introduce some subtotals into the income statement, the profit and loss account. So the subtotals would probably look at dividing the profit and loss account into operating, investing, and financing items. But that's still being worked on, so something that we'll have to wait and see how that pans out. The other issue that they're looking at is disclosures in the notes around certain management performance measures that the company may choose to disclose through the notes. Now, once again, these disclosures may not be IFRS based. However, if there are such disclosures being made, the proposals are to have reconciliation back to the IFRS numbers, and that seems to be quite a sensible thing. And in Australia we do that anyway. We're required to do that under the ASIC requirements. So a reconciliation between the management metrics, which are not IFRS based, back to the IFRS numbers. So that's one of the issues that they're looking to address within the primary financial statements project. Once again, they're expecting to put out a consultation by Q4 of this year, so hope to see that by the end of this year. Management commentary, that's quite an interesting project. Now, for quite some time, the IASB has taken the view that non-financial metrics are not within their scope in terms of setting standards or setting requirements. And I suppose the question has been then, in that case, how do we actually introduce reporting in that area? And Claire touched on climate-related disclosures earlier. That's a type of non-financial metric that needs to be addressed within reporting by organizations. So the management commentary project is looking to address that. So that's the IASB's exercise to take into account certain non-financial metrics which relate to stewardship and governance and goes beyond the financial performance metrics that you would tend to see in the financial statements. In doing that, they do say that this, firstly, it's got to be noted that management commentary is guidance. It's not intended to be a standard. It will be guidance if it's going to be issued. And secondly, it may not address all the things that people may want beyond financial information. So that's something that needs to be kept in mind as well. However, it is quite a good move by the IASB and an acknowledgement by the IASB that there are issues that go beyond traditional financial reporting that users find useful. Things like environmental, social and governance matters, intangibles, climate change related issues, a whole range of issues which would be useful to be addressed. Once that project is completed and the IASB issues their guidance, then I expect the Australian Accounting Standards Board will pick that up and look at turning that into something suitable for the Australian environment. Now, whether that will continue to remain guidance or whether that will turn into some kind of mandated reporting requirement in Australia, we'll have to wait and see. But that's something that may happen in the near future. Now, moving on to a couple of things which are not necessarily major projects. IFRIC agenda decisions. IFRIC, I've used the abbreviation there. IFRIC is the IFRS Interpretations Committee. So they perform a quite fundamental function where once a standard is issued and there are some questions raised over interpreting certain requirements in the standards, the IFRS Interpretations Committee, or IFRIC, look at such questions and look to address them either through developing and issuing interpretations or through issuing agenda decisions. There are around 200 agenda decisions that have been issued by IFRIC over the last few years, so quite a big volume of work there. And quite a lot of them are relating to specific practical issues that have been raised with the IFRS Interpretations Committee. So as a preparer, if you're interested in looking at some of the issues that may arise out of some of the specific standards, it's a worthwhile exercise to look at the IASB's website, and particularly for the IFRIC agenda decisions which are listed under each specific standard. Now, I've picked a couple of standards there to demonstrate the usefulness of IFRIC agenda decisions. The first one is revenue. In the area of revenue, they've got a few agenda decisions that have already been issued. Agenda decisions are basically notices or decisions made by the IFRIC where they've decided that the standard actually addresses the question that has been raised, but they provide some material, some guidance on how the interpretation should work. So it's a useful piece of exercise where you can actually see the thinking behind how a particular section or a particular requirement in IFRS can be applied in practice. So in the area of revenue, they've looked at issues like real estate contracts and whether revenue should be recognized in a particular way or not. They've looked at upfront fees that are received by an organization and how to account for that. Should that be accounted for as revenue upfront, or should that be spread over a particular period? In that area, in the area of leases, they've looked at a couple of issues around what is a lease. They are currently actually looking at the issue of the discount rate or the incremental borrowing rate, which needs to be applied under the new leases standard. So that's actually a tentative decision that has been published. So it's not a final decision yet, but something that would be useful for those who are looking at what is a discount rate that needs to be applied when applying the new standard on leases, the IASB 16 standard or the IFRS 16 standard. The last issue that I've got there is an open matter on lease incentives. Now, the IASB has put out a consultation asking for views on whether the guidance provided in IFRS 16 is sufficient for the accounting for lease incentives. CPA Australia has provided a submission which suggests that there needs to be more guidance. And in particular, we've said that there should be more guidance on how to account for a lease incentive depending on benefits received, and also a question around how to account for lease incentives that are received in respect of leasehold improvements, and the third question around how to account for lease incentives when transitioning to IFRS 16 or IASB 16. So these questions have been raised with the IASB, and we are waiting to hear back on their decision on that particular issue. Quickly on to the local standard setters projects. I'm picking one particular project there, which is a major project that the Australian Accounting Standards Board, the IASB, is looking at, the Financial Reporting Framework project. And I've picked up a few individual points that relate to that particular project, individual consultations that relate to that particular project, and I'll quickly run through those. Disclosure of recognition and measurement in special purpose financial statements. This was a consultation they issued a few months back, suggesting that in the short term, before the change happens. Now, the change here is, of course, the removal of special purpose financial reporting from the Australian Accounting Standards Framework. So that's the change that is being proposed. And in the interim, whilst that change is happening, there was a suggestion that where special purpose financial statements are being prepared in accordance with accounting standards, there should be a disclosure of whether recognition and measurement requirements from the accounting standards have been applied. And there was some suggestion that there should be disclosures around the quantum of recognition and measurement, so which standards have been applied and why they have or have not been applied, etc. So those were the suggestions made in the proposal. We did a joint submission with Chartered Accountants Australia and New Zealand, and we've suggested that rather than concentrating on short-term disclosure proposals, they should focus on the bigger picture and look to developing a robust framework in place of the current special purpose, general purpose framework. So that's the current standing now. They've got the IASB has got a meeting next week on Wednesday and Thursday next week when they're going to be discussing this. particular proposal, and any developments from that discussion we will be putting out on CPA update. So keep an eye out for that if you're interested in it. The second one there is Tier 2 reduced disclosure requirements. Now this is the proposal to replace the existing Tier 2 RDR set of standards. These disclosure requirements are going to be called simplified disclosures, and the proposal is to have a dedicated standard that addresses these disclosures. These disclosures have been developed based on the disclosures that currently exist in the IFRS for SMEs, which is an international standard issued by the IASB. Moving on quickly, the third one there I've got is the definition of not-for-profit. Now, for those of you who have followed this project closely, you will note that the IASB is separating out the standard, the development of the framework for the for-profit and the not-for-profit sectors. So it's first looking at the for-profit sector, and then it's going to focus on the not-for-profit sector. And the not-for-profit sector includes the private not-for-profit sector and the public not-for-profit sector. Now, in pushing that not-for-profit sector framework development to a later period, they first need to establish clearly what is meant by not-for-profit. So they've actually issued a proposal that defines what a not-for-profit should be for financial reporting purposes. Once again, this is something that we've just provided a submission to the Australian Accounting Standards Board on. Once again, it's a joint submission that we've prepared with Chartered Accountants ANZ. And whilst we agree with the definition, we do have an issue with some of the implementation guidance. And the issue we have is that you can have a scenario where some charities registered with the ACNC may not meet the proposed new definition of not-for-profit. Now, under charity law, all charities are by default not-for-profits. That's under the Charities Act. You can't have a scenario in our minds where, for a financial reporting purpose, some charities may not meet the definition of not-for-profit. So we've recommended to the IASB that they consider that conflict and address it through improved implementation guidance. We don't believe that the definition itself is an issue. It's more to do with the implementation guidance. Proposal to remove special purpose financial reporting from the framework. That specifically applies to the for-profit sector, as I mentioned earlier. Now, that consultation is currently open. Submissions are due on the 15th of November. And the same applies to the Tier 2 RDR, the Reduced Disclosure Requirements proposal as well. Submissions are due by the 15th of November for both. We have asked for an extension because we believe currently practitioners are busy with doing audits and other things because it's reporting season. So we've asked for an extension by 1 month. And by we, I mean both us and Chartered Accountants ANZ. We both asked the IASB for a 1 month extension. The current thinking, we believe, this is based on a staff paper that has been prepared for the next week's IASB meeting. The current thinking is they may seek to extend the deadline by 2 weeks, but we don't know yet whether that's going to be approved or not. We'll wait and see. Once again, any update will be provided through CPA update. I've already covered the not-for-profit and public sector considerations in that that's being parked for the minute. We're expecting that the IASB will look at the not-for-profit sector next, and then the public sector thereafter. We're expecting that consultations will be put out by the IASB in 2020 for the not-for-profit sector, with some finalization of those proposals possibly happening in 2021. And I expect that the public sector will follow after that. So that pretty much covers what I wanted to say on the IASB's financial reporting framework project. Looking at some other not-for-profit and public sector specific issues, the ACNC legislation review happened last year. Over 30 recommendations were made by the review panel, and we are waiting for a government response to those recommendations. The last we heard from Senator Zed Cecilia, who is the Minister responsible for charities, is that they're expecting to put out a government response by later this year or early next year. I know for a fact that Treasury is working on it at the moment in terms of getting the government response together. So we are hoping to get something concrete on that very soon. Quickly on to fundraising regulatory reform. This is another area where we're waiting for a government response. There was a Senate Select Committee inquiry into fundraising regulation across Australia, and the findings were that fundraising regulation is disparate and complex and burdensome. And there have been recommendations to simplify it and to make a national regulatory framework for fundraising. Once again, we're waiting for a government response on this, and any changes will be informed to the members as and when that happens. One thing worth noting in this space, in Victoria, we've heard that the local regulator here might look to streamline fundraising just for Victoria with the ACNC's legislation sometime next year. We've heard that, but we don't know how and when that's exactly going to happen, but that's a positive sign. Quickly moving on to public sector specific issues that are on the International Public Sector Accounting Standards Board's projects. The first one is leases, and this is a project that's seeking to address lease accounting in the public sector, primarily because we've got a new standard in the private sector, IFRS 16 or IASB 16. Now, the big difference in the public sector that is being proposed is that lessor accounting is proposed to be different to what is currently under IFRS 16. So lessor accounting is being proposed to mirror lessee accounting. So that's in a nutshell. I mean, I'm taking a few liberties here, but that's in a nutshell what's being proposed. But we'll have to wait and see how that pans out. Couple other major projects very quickly. Heritage assets. This is where public sector owns heritage assets like, I mean, you can name quite a few if you think about it, the Sydney Opera House, the Sydney Harbour Bridge, those are all probably heritage assets. And how to value them, how to measure the value of these assets, and how to recognize them on our entity balance sheets is a project that's currently being considered. Those first two projects that I mentioned, we're still waiting for proposals to come out from the IASB. The third and the fourth ones, there are consultations that have already been issued. We are currently considering the measurement project and the consultation arising out of the measurement project. So this is sort of similar to the IFRS 13 standard that you have under the IFRS framework, IFRS 13 or IASB 13. Not quite the same, because the measurement proposals go far beyond what you have in IFRS 13, which is simply looking at fair value. And the measurement proposals go beyond fair value. But once again, the consultation period is currently open. And the last one is just looking at public sector specific financial instruments like monetary assets like cash and gold and other things that governments hold. Once again, an open consultation. I'm conscious that we've got just over 5 minutes left. So I'm going to stop there with my presentation. I'm going to quickly move on to another polling question, if I may, somewhat similar to the ones that you answered earlier. So this is potentially looking at how well are policy matters being communicated by CPA Australia. And you've got those choices there, and you need to really choose one, not more than one. So if you could please answer those questions, and that'll be helpful to us in telling us how well we do communicate our messages.
And Ram, just while everyone's answering that question, I noticed a couple of questions have come through on our chat line. And the first one was, why is there a difference of audit quality between states, and will it ever be one standard? So I think the question is around why there's different requirements. So if I understood that question correctly, there are, unfortunately, each state has its own right to issue, legislation and regulations, and the Commonwealth can't really dictate how that pans out. So there are a lot of differences, and certainly we're doing quite a lot of work in trying to address those. And we are looking at ways that we could improve government understanding of having consistent requirements that are consistent with the AUASB standards. So it is certainly something we're well aware of. Look, sorry, I realise now the polling's finished. So just back to you for a moment to look at those, Ram.
Thank you, Claire. It looks like 2% don't think that we communicate our policy matters very well. So we obviously have to improve that to make it down to 0. Yeah, look, 63% think that we communicate our matters policy matters adequately. 8% think we do it really well. And another 11% believe that it needs to be more comprehensive, and a further 5% not sure. Now, with that 5%, most of the communication channels that we used were mentioned in our earlier polling questions, the first 2 polling questions that you saw. But we're also looking at improving our ways of communication. So we've got a few, we would like to hear back from members on what means they would like us to communicate better. Claire, was there something you wanted to say on that?
Yeah, so look, one thing we're looking at is whether an online platform could be a good mechanism for us to not only share our the policy matters that we are wanting to communicate on, but then receive feedback on that. So look, we'd be really interested with feedback on whether people might find an online platform useful. Now, we do have email address, which is policy.advocacy@cpaaustralia.com.au, and we'd very much welcome any comments you have about communications. I would also highly recommend, in the meantime, if you're not getting some of those communications we mentioned earlier that you might be interested in, please check your preferences on the member area of the website. You can log in, and I believe you can change those preferences. Make sure you're getting all the communications that are available to you. But look, communications is really top priority for us, both outward, us sharing with you what we're doing, but also hearing back from you about your views on policy matters, so that we can influence in the most appropriate way in the public interest, and also covering off areas of concern to members. So look, we have run out of time. However, the other question I was asked was around whether links would be provided. There are a number of links that should be live on the slides that were downloaded by you, so please do look at those. I've made a note of a couple of things that might not have been linked, and we will pop them up on the chat now, so that they can be available to you. For example, the guides, I mentioned Audit Quality guides, we can put those links up, and Climate Risk Bulletin, for example. So we'll add a couple of links now, and hopefully we have addressed those couple of questions, and Michael is one who was making a question there. Please do feel free to clarify if we haven't addressed that adequately. Please do email and let us know. So I think we'll need to wrap up there. By all means, send through any final questions, and we can certainly try to address those next time if we're not able to do so right now.
Okay. Claire, thank you very much, and hope our participants got some value out of this presentation. Thank you to the participants for being part of this exercise, and we look forward to doing more of such webinars in the future.
Yeah, we certainly do. Thank you.
Okay. Okay, I might just jump on there and thank Claire and Ram very, very much for their presentation. Also, a special thanks to everybody for your participation throughout today's webinar, as well as those couple of questions that also came into the chat box as well. That does formally conclude today's webinar. Just to exit, click on that cross on the top right of your screen, letting you know upon exiting, you'll be automatically redirected to a feedback form. Now, the feedback form only takes about 30 seconds to complete. However, it's really, really beneficial for CPA Australia as well as our presenters, so please leave us your thoughts. Just letting you all know that you'll also receive a copy of today's recording as well as the updated version of today's PowerPoint presentation, which will be sent to you within the next 24 hours. Now, Ram and Claire, just looking at the chat box, there's a lot of thank yous there, so thank you very much.
Thank you.
Thank you.
And I hope to see you. You're welcome. And I hope to see you all in another CPA Australia live webinar. Thanks, everyone.
Bye.